Well, certainly inflation is something that investors also need to pay attention to. Dominic Chu now looks at what rising prices could mean to your investments.
When it comes to the stock market, certain sectors and industries will fare better than others in an inflationary environment.
Consumer stocks are very good for a bit of inflation, a little bit of pricing power. Industrial stocks are also excellent, as well as energy stocks. The stocks probably least likely to perform well would be financial stocks, utilities, that really depend on the short-term market.
But the story doesn't end with the stock market. Gold is also on the rise as investors buy it as protection against inflation and geopolitical unrest in Iraq. As a result, gold mining stocks have been a recent beneficiary. One exchange-traded fund that tracks the industry has been languishing over the past year, but has surged around 17% in just the last 2 weeks alone. Other assets like bonds could also see a big impact from an inflationary environment. Bonds tend to lose value in times of rising prices and rising interest rates.
I think the bond market is a risky place, and I think people don't realize how risky bonds can be. If you look back at 1994, for example, the Fed raised rates 7 times during the course of that year, and bonds actually lost people quite a lot of money.
Of course, just because the recent trend has been for higher prices, that doesn't mean everyone thinks it's a longer-term phenomenon.
We actually think that the developed world, anyway, is in a period of sustained deflation. And the companies that have been very successful for us in that environment are those that are driving their costs down lower and selling products that can actually save their customers money.
So, regardless of what you have in your portfolio, many experts believe that now is the time to get a game plan in place, just in case inflation becomes a bigger problem. For Nightly Business Report, I'm Dominic Chu.